All right, good morning. It is Monday, April the 7th, 2025. We hope everyone had a nice weekend. Kroll family, it's really, really nice. My mother-in-law came in town for my daughter's had a spring ballet performance, which was really, really nice. So very thankful, appreciative for Mary, my mother-in-law, coming in and helping out. The extra set of hands is just always so helpful around our house. I also got some much needed yard work done. I think I was in the sun a little bit too much, but that's all right. Obviously, a lot to get to this morning. An eventful few days here, just in global markets with tariffs, which we'll get to that in just a minute. But I do just want to make a quick note. So 2024 IRA contribution deadline is April 15th. All right, so about a week away. All right, many of you, if you already work with our office, many of you have already tackled those contributions. But if you are eligible and you have not yet contributed, probably a decent time. So you want to, again, if you work with our office and you haven't yet, we'll be reaching out in the week ahead here. But just keep in mind, April 15th is the contribution deadline for 2024 IRA and Roth if you're eligible. All right, so obviously dominating headlines is the new tariff announcement. So this came out Wednesday evening after the market had closed, which set up 2 trading days, Thursday, Friday, of just I would say confusion, just a lot of market participants trying to price in kind of what this all means. All right, so I'm sure many of you have already seen, President Trump came out with the board, and in the left column, it showed our many trading partners and kind of the implied tariff rate that other countries charge us, right? So whether it's tariffs, and then a little bit subjective because they were also including things like currency manipulation and trade barriers, which though kind of difficult to quantify. Nonetheless, the left column had their implied, the administration's implied tariff rates that were being charged to the U.S. And then the right column, which was labeled reciprocal discounted tariffs, kind of the plan to charge other countries on the right side of the board. All right, and bottom line is the right side of the board, kind of the new plan to charge the tariffs on our trading partners. It was higher than expected, like much higher than expected, and not surprisingly, market saw that instantly. The futures start heading south. Equity futures, that is, start heading south, and what we've seen the last couple of days is just market participants pricing in that short-term hit to profitability, right? And again, both sides of the political aisle agreed. Like in the short term, higher tariffs equals lower profits, and I'll explain why that's the case in just a minute. So obviously the follow-up, further down the road, this is where you get the more of a political divide. What the Trump administration is trying to accomplish with the tariffs, and obviously the other side of the aisle that doesn't think it's a good idea. But that's outside of the scope of today. But in the short term, why you're seeing the market prices in, and I'll just give you a good example. So we at our office here, we work with a number of business owners, okay, many of which do international business. And just in the conversations we've had with them in recent months, it's just that they feel like they're kind of in limbo, right? Because given different tariffs, right? If you already have these existing relationships that you've been working on your supply chain, whether it's produced in India or China or wherever parts of their supply chain is made up, like, are you going to be forced to start over on your supply chain? Like, do you need to find new countries, new trade partners to work with? And as you can imagine, for a business that's been doing this a while and it has these relationships in place, it's really hard to do that overnight, right? Do we start building in other countries, or do we try to invest in a new factory, a manufacturing plant here in the United States? Do we just start building that? I mean, obviously that takes time, and whether it's a small business or you can imagine on a large corporate level, some of the decisions that go into it might take 5 or 10 years to build a new plant in the U.S. Right, and then it's like, well, if we develop all these new relationships, and then if they just remove the tariffs one day, well, so you can see how it's a hit on short-term profitability, right? The uncertainty, it creates a hit to existing relationships and trying to play this out, right? So short-term hit to profitability, and so that's why you see markets reacting the way they have in the recent days. Last week, the NASDAQ, so not surprisingly, it's the highest valuation kind of tech that's been hit the hardest. The NASDAQ alone last week down 10%. So as of this morning, it's going to be down over 20%. Just this year, the NASDAQ. Okay. Some international economies, like we went over, even last week, on a relative basis, performing better than the U.S. Bonds had a nice week last week, kind of doing what they're supposed to do in, we call it the war chest of cash and bonds, which we're going to touch on that in just a minute as well. But just a good take that I thought was worth sharing. Obviously, I read a lot on this in recent days. Just one analyst firm that they came out and just said, while the market was a little caught off guard, they felt the worst case was actually if the Trump administration had come out with like a lower tariff with like threats to escalate. And I kind of agree with this. Like they feel rather, this looks like peak tariffs, where it's like, boom, let's just hit it and let's allow corporations to make those hard decisions, what they think is going to be best long term for their businesses. And then if we can get some more favorable terms, now we're in a position where we can de-escalate. Okay, so I just thought that was a nice view. But regardless, okay, so I mean, there's a lot of uncertainty. We'll see the way this plays out in the weeks and months and years ahead. But like we always do at our office, you want to plan, you want to control what you can control. And I think regardless of where you are in life, like this is why it's so important to have a financial plan. All right, so kind of break it in two different buckets, right? Like if you are a retiree that is taking distributions, this is why it's really, really important to so we use guardrails in our office where we know what that safe spending limit is, okay, and in that guardrail portfolio, this is exactly why we have roughly 7 years of, again, they call that war chest of cash and bonds, where it has nothing to do with like what the equity market is doing, right? 7 years of spending, just cash and bonds. So that's the way our office does it. That's a very conservative approach for retirement. But point being, you just need a plan, because if you probably don't want to be selling equities right now, when they're temporarily lower, right? So you want a plan in place, and then if you're on if you're still in the accumulation phase, right? If you're still working and adding to accounts, right? So this is where, and it's very counterintuitive, but just the way our human brains work. But we share this in our reviews with our professionals that are still working and adding to accounts. But it's a pullback like this, if you're still adding, can be a wonderful thing for your long-term plan, right? Again, it's a little counterintuitive, but like when the market gets a haircut and you continue to contribute to your 401k, or better yet, maybe you say, hey, like this is probably a time to increase that contribution if you're not already at the max. You start buying up more and more shares at lower prices, right? So you get more shares for the same dollar amount, and long term that can be really, really, really powerful. All right, so for the younger professional, this is a time, maybe you revisit that contribution rate. Maybe again, like I mentioned earlier, if you haven't already, IRA, Roth IRA contributions, that's a good time. And then kind of step 3 in that would be, if you're already doing that, IRAs and 401ks, like kind of that non-qualified bucket, like this is a good time to consider adding to that, which we have we work with some really smart people, and we've had a number of clients reach out just in the last couple of days you're trying to get more money in the market, just because we'll see the way it plays out. But the last couple of days, it seems to be trading. It reminds me a little bit of the way the market was working with COVID, right? When there's just a lot of uncertainty, what's happening, and you see kind of that panic selling. So we'll see. We'll see. But bottom line, you want to have a plan in place regardless of your phase of life. All right. Of much lesser importance, it seems, but we received the jobs report last Friday. So the jobs report was much better than expected, 228,000 new jobs. Again, the Doge-related layoffs are not in this report. Those will not begin to be seen until next month's report. So next month will be more interesting. And then this week we get updated consumer price index, producer price index. So we'll see where inflation looks for the month of March. So sorry for the longer video today, but just a lot going on, and just want to you want to have a plan. So questions, comments, concerns, please don't hesitate to reach out to our office, and we'll talk to you soon. Thanks.